Hi everybody, I recently published a document on the definition of income or gain as it relates to tax, and we've had a huge number of members reading the document, which shows that a lot of people are very interested in this, and I think there's a very good reason to be interested in this. I mean, very simply, if there is no definition of income or gain in any tax manual, how on earth can the tax offices actually lawfully charge tax on anything? And then when you really get into it and unpack what is going on here, it kind of makes sense why the tax offices and the tax manuals and the law books don't actually define with any clarity whatsoever. There's all of these circular references going on. You know, it says, if you look at what the definition of income is, it says an income is a gain. And you go and look at the definition of gain, and it says the definition of a gain is an income. And it goes round and round in circles. And you know, I was very intrigued by this, and I started to look into it a little while ago, and then realised why there is no definition of income or gain. And it comes back to, and you know, if you read this document, I give various references to what in different tax manuals, what and how they describe income and gain, which is for me very amusing, because there still is no actual clear definition of income or gain in any of the manuals that I've searched. But let's have a look at the reason why, and it becomes very obvious when you realise that the entire Monopoly board, which we're all playing the game of Monopoly on this artificial Monopoly board. The living man-woman is never on the Monopoly board, but the artificial construct of the birth certificate entity, which is the banker under the Bills of Exchange Act 1882. It's that entity that is playing the game of Monopoly. Well, it's the player piece, and of course the player is the living man-woman who's not on the Monopoly board. But when you realise that the entire Monopoly board is operating since 1933 in bankruptcy, as I've referred to on many of my webinars and written in many of my technical papers on ecclesia law, then when you realise that the entire Monopoly board is bankrupt, how on earth could there be a gain for any of the player pieces on the board? If every player piece on the Monopoly board is operating in a bankrupt system, then you can begin to understand why the tax offices and the law books don't define a gain. Bankrupts can't make a gain because they are bankrupt, and everything on the Monopoly board is operating in a debt-based system. So then when you look into the rest of the sort of aspects of this, let's have a look at what happens when debt, because that's what everything is on the Monopoly board. Everything that we call money, or the common parlance of money, or I'm going to pay for something. Of course, you can't pay for anything if there's no money of substance. There's only human energy backing the money supply. When you start looking at deposits in bank accounts, now it's very interesting that you open a bank account and you make a deposit, so you think you're transferring funds from some other account to a bank account, a new bank account, and the bankers will tell you thank you for your deposit. Well, what did you actually do when you made that deposit? Let me tell you. What you actually did was you issued a new security to the value of the deposit. The bankers said, thank you for that. We're going to bring that in as the bank's asset, and we're going to create a matching liability, and it's that liability that you see in the bank account. And where they show the balance as a positive value, it's actually a negative value. It's a debt. It's a negative value. Remember, everything on the Monopoly board is operating in bankruptcy. Everything is a debt, and all of the player pieces on the Monopoly board are just simply moving debt around the board. So when you look at the fact that if you remember, Venezuela, if you remember Cyprus, if you remember, many countries that got into great difficulty in various bank runs were happening and banks were going bust and people were queuing up outside the banks wanting to get their deposits back. Well, they soon realised that the bank was holding the asset on the asset side of their balance sheet. The deposit that the customer made was never really, they never had any ownership of that deposit, because all they did was tender a deposit through a negotiable instrument. That's what the deposit is. It's the tendering and the transference of energy onto the monopoly board through the bank that's operating as a nominee, as a fiduciary, as a trustee. And the deposit is not then owned by the depositor. So what you've got now is you've got the banks holding the asset. They create a matching liability, which is what you see in the bank account. It looks like a positive balance, but in fact it's a negative balance. And then if the bank gets into difficulty and closes down, all of those deposits belong to the bank because they hold the asset side of the balance sheet. So nobody actually has any funds of any value in a bank account, which is another reason why, how can you make a gain? If the only way to transact, unless you're using coins or notes, is through digital transactions, if the living man woman is the agent for the body corporate and the body corporate birth certificate entity is making these deposits and those deposits, the asset side belongs to the banks, how can the living man or woman ever make a gain? Because everything that they're depositing is negative, it's a negative value, it's a debt, and the asset side of it belongs to the banks. So how can you make a gain when everything that you're doing as the living man woman agent for the body corporate birth certificate, the birth certificate construct is in fact just dealing in debt? How can there be a gain if everything is a debt? And if you then look at various court cases that I list in this document, it confirms that the depositor, which is the birth certificate entity, doesn't own anything in the bank account. The fact the bank owns the deposit because they've got the asset side of that birth certificate deposit, the birth certificate entity deposit. Then you look into the birth certificate itself and you realise that the living man woman is the agent birth certificate construct. It's just an agency relationship. The birth certificate itself is artificial. The living man woman is the agent for it and therefore is the surety for it, and therefore is the liable party. And that's how they drag the living man woman into courtrooms. That's how they drag the living man woman into bankruptcy and into even more extreme things like prison sentences, etc., etc. But then when you look at the birth certificate itself and what's happening with that, when your mum and dad registered the birth certificate, they registered it to the state. Well, the registration of the birth certificate means that the state owns the birth certificate. And if it's the birth certificate that is making these deposits as a banker under the Bills of Exchange Act 1882, it's another reason why there can't really be any income or gain, because all of those deposits that have been made, apart from the energy, which of course the energy comes from the living man woman that can't go on the monopoly board, all of those gains or alleged gains or income belong to the state, because the birth certificate entity as a banker is registered to the state through the birth certificate registration. So then you've got you've got this bizarre situation where tax offices want to tax on money which has no substance, which is all debt based, on an entity that made deposits in the banks where the banks own the asset side. It starts to make a lot of sense as to why there is no definition of income or gain in any tax manual. And then you look at the proof, if you like, that the living man woman has transferred their signature energy into the game of Monopoly or onto the game of Monopoly through the birth certificate entity. And that is evidenced by the fact that the taxpayers, which is the ultimate holders of the deposits, that's the investment banks, are paying taxes for the rental of the living man or woman's energy. And we've proven that through our 1099 OID recoupment of abandoned signature credit operating via a nominee structure, a grant or trust structure, and getting $600 million of confirmed IRS recoupments in 2025. So if all credit is created from the signature, if that signature is really it's tapping into the energy of the living man woman through the birth certificate construct, which belongs to and registered to the Crown, and the banks are taking the asset side of those deposits, there's only debt on the Monopoly Board, and you can prove that through the recoupment of the signature energy, then all of these reasons stacked up, if you stack them all up into an argument that you may want to have, or a presentment in a court case, then it's very compelling that there is no income or gain, and therefore there can be no tax. It would certainly be a very, very intellectual presentment in any court case. There's so much evidence to back up what I've just been describing, and what more evidence than you need? Do you need than the signature energy recoupment evidence, which we've got in spades, and we've got the fact that the taxpayers, which is the investment banks, which are holding the securities, but they're not the holder in due course for the securities. They just use them until the record's been corrected through the 1099 OID filing, which I've described in many of my research papers at 𝐂𝐥𝐢𝐲 on recoupment of abandoned signature credit. And this is the extent of how much tax the investment banks, which are trading in our signature energy, are paying in tax. JP Morgan, this is the 945 ledger. This references the declared taxes that JP Morgan are saying that they're paying in relation to renting our credit energy. But then they've got another 37.16 billion on this, on the other tax modules, which could be moved over as into the 945 tax module, as I've mentioned before. So if you then look at another aspect of this, which is the Interpretation Act. So if you look in the UK Interpretation Act of 1978 and various US statutes as well, you get to realise that the birth certificate construct and everything that it creates belongs to the Crown, belongs to the state, belongs to the government, because they have taken a mortgage out. The cabal, the state, if you just call it the state, the worldwide state, has taken a mortgage out over the energy of the people and holds all of the property under a mortgage. And that's what is going on in the bankruptcy of the United States. So if you look at the Interpretation Act, it's telling you in there that that all the liabilities belong to the state, and it also says the same in the US. You can actually discharge all US taxes under 18 U.S.C. 8 with an endorsement, and the tax bill is discharged. And we've done this, and we've proven it works, and we're going to be rolling it out to our US members with a great deal more marketing very, very soon. So there is a mathematical impossibility of gain in a debt-based economy. How can there be a gain when everything is a negative? How can there be a gain when everything that's registered is registered to the state? How can there be a gain when the banks, when you open a bank account, they own the asset side of the deposits? How can there be a gain when all of those signature credit energies are bundled together in investment bonds traded by the investment banks, who are paying taxes for the use of our signature credit energy, and then you can recoup it? How can there be a gain in this system? So if you look at all of the main jurisdictions that Republic of Old Souls operates in, the UK, the USA, Canada, Australia, New Zealand, every single one of these jurisdictions, these countries, operates pretty much the same system, with very, very similar tax guides, very, very similar law books, very, very similar banking models. Everything about it is very, very similar. And at the back of this report is all the various sources that I used to create this report. So it's a very fascinating subject, and I'm going to be talking about it more as we go forward. I'll be doing more and more webinars in relation to various tax problems that people are having, and I hope that you've picked up the message that I've put across in this webinar. It's all an illusion. Nothing is real. It's all based on illusion. The Monopoly Board of Commerce doesn't have substance. Money doesn't have substance. The whole system is bankrupt. It's all operating in debt. There cannot be a gain or an income if there is no money of substance and everything is a debt.